But that doesn't necessarily have to be so, because I think the point last made was that a lot of this fintech is being bought up by the banks. So there's an opportunity to make a lot of money if you've developed brand new fintech. And then the Regtech is usually the term for just the regulatory technology side. And I pulled up this Juniper research estimate just to give a feel for how much is going to be spent. And $115 billion by 2023 on Regtech. So one of the interesting things about this whole area of study is that there's a tension here. We know that a lot of companies put their ERP systems in Luxembourg for a reason. They process their transactions there because the tax structure is different. So you may locate your ERP in the EU in different locations as well, just because of that. So variations across the globe in how Regtech is implemented by different entities will affect where corporations declare their existence, and certain countries may have more lax regulations than others, but this will be an issue of trust as we look at different companies and where they opt to locate and what amount of regulation that they tend to bring forth. So right now, there's 3 ways that Regtech is evolving, and most across the globe pretty much. One is a rules-based approach, and that's really rigid and saying, here's what you can and can't do. You have to follow the rules. There's huge compliance costs for all stakeholders. And lots of times you can express those rules in terms of business processes. So for our services computing researchers, once you can express things as a business process, that's very nicely follows into our historical research. The next level up becomes a little bit more general, the principles-based approach. So there's the regulators and the business entities often get in dialogue. They set some standards for the desired outcomes, but there's a little bit more hands-off in terms of the regulation. So there's flexibility and freedom to interpret the standards, and you can be a fintech that behaves with quite a bit of leeway until maybe you cross the line, and then you violate some standard and you may get your hand slapped. The bottom one is what we're seeing in terms of these sandboxes that are being created by the different governments. And that's an insight-based approach. So they bring you in and say, come and play, and we'll help you get started, and even let you demonstrate your capabilities to other venture capitalists or people who might want to invest in you. So there, it's increasingly data-driven, and it's intended to take out friction, share information. This has been a good area for fintechs to leverage blockchain and try it out in a controlled environment, or there are different algorithms for blockchain. And the regulatory structures will probably there focus more on the real-time data reporting, and of course the analytics then, the big data area of services computing, will have a huge implication to how this progresses. So those are like a couple of opportunities there just in the way this is evolving that services computing can contribute. So I chose a particular use case just to demonstrate some of these things, and I picked it as supply chain finance, and I tried to think of like 2 or 3 examples just to tell you that might be interesting. So we all know what a supply chain is, but let me give you a couple of examples here. Suppose I'm a supplier to Walmart or some great big company in whatever area of the globe you are. Because I've got a purchase order from you for widgets, my credit score may go up because I can show that evidence of that credit score, which shows that I can begin to get more money, no matter what my past might have been. So let's suppose then that instead of going to a bank, I crowdfund it. Right? So I post it on a website, and I say, look, you guys want to invest in me, contribute some money, I'll give you this payback in return. Now I've collected all the details from those people who want to crowdfund me. I've basically got loans from them, right? Bypassing a bank completely, and maybe my company dies the next day, or I just decide to sell that list to people who crowdfunded me. This starts to get scary pretty fast. Another example, I may take the receivables that I'm due from one of the companies that I've already sent widgets to, and to get my money faster, I may sell those receivables. Those receivables may be sold 3 to 4 times. I don't even know where they end up. In fact, the credit card companies right now, when you charge into a network, they're doing reverse auctions selling those receivables across that network in order to make money. That'll happen in the supply chain as well. A lot of those credit card companies converted to banks. American Express is a bank, right? And that for that very reason. So it'll be interesting to see if that disintermediation affects those companies that are doing side businesses, adjoining businesses, that can leverage the advantage of being a bank. Another example is I can use platform funds. So, for example, in some of the research, I noticed that Alibaba will actually fund some of its suppliers and act as the bank intermediary. And Ron told me that, yeah, they did for a while, and then the Bank of China, or I mean the government of China figured out kind of what they were up to and began to kind of get control of that. But think of the big platform providers, your Facebook, your Amazon, your Alibaba, Tencent, as basically being able to become banks without telling anybody or be regulated. So supply chain gives us a lot of examples of where we might take advantage of some of this. And one of the reviewers for my paper said, well, can you give us some more specifics about the supply chain and how this might fit, which I tried to incorporate here. First of all, supply chains typically focused on the movement of goods and materials, and then more recently how to share information so you can leverage that. But now finance can actually be included in that loop. You can share the financial burdens across the supply chain in order to make it more competitive. So that will be an interesting thing. So here's a typical supply chain set of value streams where you source an item. That's through that top element. So you source your suppliers, you select your suppliers and goods, you ultimately send the purchase order, it goes to another company, and there's order to cash, and so on and so forth with the different companies involved in the supply chain. Now we can look at opportunities in this where there might be disintermediation by the existence of new fintech. So here we see credit risk analysis can come into play, and some of the things I've seen are that actually a credit score might be assigned to an entire supply chain versus an individual company. That's an interesting notion, right? A global credit score across countries, and then that's leveraged to let people borrow money. Other things I've listed here, ability to manage purchase order and inventory financing and letters of credit, forward foreign exchange transactions, et cetera. So many of these areas in supply chain are ripe for the taking by new fintech ventures. So what does this mean? It means that if you think of some use cases and you get into some of the specifics, the innovators in fintech can find some of these niches, target those niches, and create new companies and go play in the sandbox and try it out, and then new Regtech will have to figure out how to make sure it's all compliant. So this is, I think, a good use case. So what did I learn from this use case? First of all, I think there's 10 key issues for the services computing science community and some of the research that can be done. We really need, as a community, to get involved in the global Regtech sandboxes. And we have to reflect that engagement in how our methodologies work. I don't think any of the people here probably have gone in and put something in or even read the rules about how to begin to test some of their ideas in one of the sandboxes. We need to handle the multi-jurisdiction regulation issues that really are a natural for resurgence in what we do in composition and other types of research. And some of those features were mentioned today during the panel, that traditional services computing research can have definite implications to how we handle these multi-jurisdictional issues. They're going to be some of the messiest because every country right now is trying to figure out its own internal structure for handling this. So in some sense, our community can help lead the way in some of this multi-jurisdiction regulation. There are also really complicated issues between these fintech pioneers and the regulators. And you have to have a win-win situation there. And we need probably, like what academics and industry has done in the past, is to create an independent zone where we can be the filter, academics can be the filter for what industry on the banking side or on the regulation side, what they want to do in this environment, and help to alleviate some of those tensions. Now, the data regulation that already exists today is also going to go hand in hand with both FinTech and Regtech. And the reason is that example that I cited where you may crowdsource some of your funding of your inventory, and then I mentioned that maybe we sold that data of who crowdfunded me to another company. Well, as we do that, we're violating all of the privacy rules of those people. So the new solutions will have to combine both data regulation as well as FinTech regulation into the Regtech capabilities that we have, which is an exciting area because we have in services computing advanced a lot of ideas related to privacy and managing across these multi-jurisdictions in some of these instances above. So there's probably going to be 3 different types of Regtech to begin with. One is really going to tackle operational efficiency, and the services computing community has been really strong about thinking in terms of benchmarking with respect to operational efficiency. That's going to be very important research, I think, for the Regtech industry. But something new is this risk-value trade-off, and I've been hearing during our discussions that how much do you pay for compliance, but also how much do you pay to protect things versus the value that you might get? And companies make these trade-offs and in control all of the time. The third is that services computing, through this lens, can help shape public policy. And I don't think we've thought of that role before. We've probably tangentially impacted through cloud computing and other areas. But really playing in this Regtech space, you begin to change how your governments might view their capabilities in terms of managing this banking, emerging type of FinTech. Another one is as we get more data collected and available to all the regulators, all of our big data and analytics research and services computing can really come back to play. Because the regulators are going to need those capabilities to do compliance reporting, and it needs to be done more efficiently so it doesn't cost business so much. So in this complex supply chain, we'll want to aggregate data. We may need to send that data across different boundaries. We may data mine that data for regulation purposes, and we may actually have predictive models that are developed cross-country, which is an interesting notion. Finally, or next to last here, Regtech and FinTech maintenance is going to be a key concern. So our traditional approaches to maintenance and testing and validation in services computing will have big implications to this because, I mean, let's face it, since the days of barter, we've become used to financial technologies, or at least some form of finance, helping us move our markets and our economies and our societies forward. So this will be kind of a next generation of that. So the last point that I had was I really think there's a call to engage here, that our services computing community has a lot to offer. I think that becoming familiar with some of these financial terms and how financials are being processed. We have a lot of work on cybercrime and other areas, but thinking about the bad actors in this new environment will help us discover ways to take care of our vulnerabilities. And I think this overall global progress of FinTech will be important, that the country of China is taking a certain approach, India is taking a different approach with the India stack. The US is a little more loose right now. Who knows what's going to happen? But all of these different country combinations and how they're approaching things, I think combined, will be able to have that global perspective, and it would be a great contribution of our society to help link that up. Thank you.